we're now going to have a look at the idea of trading markets in both directions. Of course, one of the appeals of spread betting is the fact you can sell short. And selling short is a new concept to a lot of people, so I'll just spend some time explaining that. Let's say, for example, you thought the FTSE 100 was going to drop. I'm going to just bring up a chart for the FTSE 100 now with Impure Deal so we can have a feel for what it's been doing over recent days. We've seen quite a bit of weakness for stock markets over recent weeks. Now, of course, if you thought a market was going to drop in price, you wouldn't really want to be a buyer. If you thought the market was going to drop from 5150 down to 5050, 100 points, there's no point in buying the market there because you're going to be losing money. So the way to profit from a market sliding is to sell short. And as I say, lots of people have something of a problem getting their heads around this, but it's actually quite a straightforward process. And the way you trade it, we'll do it in a second, is you sell first with a view to buying back later on. And I think it's this bit that maybe can tie people's brains in knots, the idea of being able to sell something you don't own. And I would just say in financial markets, it's something that does go on all the time. And with spread betting, it's no different. You can trade markets in both directions. So if you have a negative view on a market, it's just as easy to position yourself to profit from that market sliding in price. So let's just take a look. Let's pick on Microsoft. Again, I think the best way of learning how this stuff works is to actually do it. So we'll bring up Microsoft. So Microsoft's trading around about $24 a share. Let's say we thought that Microsoft was really going to suffer over the next few months, and we'd like to position ourselves to profit. You can see on US shares, you can trade even smaller again in terms of pounds per point than you can on UK shares. So I'm going to do 25p per point on Microsoft. Now, in my opinion, I think that for the purposes of this demonstration, Microsoft's going to drop in price. And I think they might drop from where they are now, about $24, down to $20 over the next few months. If I click on buy, based on my opinion, that would be a fairly stupid thing to do, because if I'm going to buy them at 24, I think they could be $20 in a few months' time. So to position myself to profit, to open the trade, to short sell, I need to click on sell first of all. But what I can do, before I do that, I can also place a stop loss on the trade. So if I think, okay, I think Microsoft are going to go down, but if they go against me by, let's say, 200 points, which as this is a US share, would be a $2 move against me. So if it rose $2, get me out of the trade. So I can put a stop loss on, and now I'm going to open up the trade by clicking on sell. That's it, it's done. I'm now short Microsoft. So I've done a trade, opening the trade at 23.96, selling 25p a point, with a stop 200 points above, of course, in this example, above where I opened the position. Again, if I go to my open positions window, there's that trade there. There's the FTSE trade from earlier. It's come back up to not a million miles away from where we bought. But there's my Microsoft trade. So I've opened the trade at $23.96, selling 25p a point. So that means I am short. I am positioned to profit if Microsoft drops in price. And then it's completely up to me how long I keep that trade open for. I may think that Microsoft's going to drop in price in the next 10 minutes. I may think it's going to drop in price over the next 10 weeks. It's completely up to me how long to run the position for. And again, with spread betting, assuming the market is open, you can get out whenever you want to. Let's close that FTSE trade now. If I click on my FTSE trade, I can click on sell. That's it. I'm out of that trade for the FTSE. It's completely up to me when I get into or out of positions as a client. I don't have to tell IG how long I'm going to run the trade for. It's up to me, assuming the market is open. But that hopefully demonstrates just how easy it is to trade markets in both directions. So if you thought the price of oil was going to go lower, or gold was going to collapse, or the pound was going to suffer, you can just as easily position yourself to profit from the slide as you can if you think the market is going to go up. So hopefully that's short selling demystified. And again, I think with a lot of this stuff, once you have an account, just try it. Do a small trade, but do a small trade on the short side just to see how this short selling idea works.